Hey everyone, John Henry from School of Trade. Today we're going to be taking a look at a setup here on the S&P. We're selling the highs with the buyers completely falling apart at the top of this channel high. Now this is somewhat of a spiking channel in that we just dropped lower and then we started grinding our way back. Now we saw the buyers try to pick up these lows, right? They bought underneath those lows, pushed up, they bought the pullback. When they tried breaking out through the highs though, that's where everything sort of fell apart, and all of a sudden now the sellers swarm back in, right? Buyers try, their follow-up is a doji. They go into bear, follow-up is a doji. Another bear, bulls try to break out, and you can see massive failure on that big wick into this huge bear candle showing that they just gave up. Now, the problem with that big bear candle is I don't want to sell all the way down here, right? That's not a location that I want to be selling because I'm selling the highs of a channel. I want room to get down to the lows of the channel. The last thing I want to do is sell all the way down here and only get a couple points out of it. I would much rather see if I can get the market to come back to me a little ways, get a better fill up here so I've got a lot of distance to the downside so I can get those targets filled with some decent profitability built into the move. Now, this overall failure from the buyers is definitely looking to see a move back down to the lows. The one big thing that we need to break is this rising area of support that we can see coming between those last two swings. We need to see the sellers break underneath this level and prove that they actually want to take this lower. Outside of that, though, everything is looking really good. Given this failure that we've had right here, I'm going to lock my stop right above that. I don't want to see this come back at all. And then in terms of the downside target, really just looking for the channel lows, right? So we have the channel lows down here, so we can put that at 96. And we'll take 3 off right there. Now that will change as we get more and more candles here, but that's the importance of sometimes if the candle's just too big, you're much better off just getting, or at least attempting to get, a better entry on it. So that way you have more chance to be right. We've got a lot of downside movement in here. So now, even if they don't break underneath that low, we can still get a scalp out of it at the least. And that's really a big part of getting those better entries when you can get them. Sometimes they don't come back for you. So everything's looking really good here. Stop is nice and tight compared to the target. Now we just have to wait for the market to either wake up and drop or take us out at our stop loss. Seeing the sellers having a little bit of a hard time here breaking below this rising area of support. So I'm locking my stop into break even to lock out all of the risk just in case we're wrong on this breakout move. I don't want to give anything back, and if anything, I want to make a little bit on it. So we have it locked into +1, so we at least cover commission. Now, if we can get the sellers to take this down, we shouldn't have much of a problem down to those lows. But again, to prevent a situation where they do end up holding an obvious area of support, I don't want to be stuck holding the bag when I'm sitting in a negative position. So entries short at 99.75, stop is at 99.50, so we have a tick locked in. Looking for the downside target at 96. You could try moving it down to 95.75, which is technically the bottom of the channel, but given that how range bound we are, I would rather just front run it by a little bit just to make sure that it's not going to test it to the tick, I don't get filled, and then I have to give it all back when it goes firing back up towards my stop. So I'm going to front run it to 96 instead, just to be a little bit safer. We can see the sellers are trying to break down this move that is what we want to see. Now we need to see them finish this job lower. The bear candle that we had right here is the thing that makes me really the most nervous. With all of that wick down at the bottom there, that's a pretty big concern. We need to see the sellers really drive this down soon, and if they start failing and they start turning back up again, you know, we don't really want to be in the short trade anymore. Oh, and there we go. Nice little pop down. We get the target filled, and you can see if you had your target sitting on that 95.75, it would have tested you. Absolutely no way you got filled there, not unless you had that order sitting there for the last week. So beautiful move down, a gorgeous example of understanding the day type and knowing that this is a range type day. It's not expected to get those big moves and breaking through levels to get your targets filled, etc. Front run them and make sure you get your profit off. And that's going to be a beautiful example of a buyer failure off of the spike in channel highs, driving the move all the way back down to the spike in channel lows. So that's going to do it for me. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.